Hello, everybody. This is Joshua Hayes here with the weekend stock market wrap up for you to use, obviously, for Monday or even next week. Because, like I said, look at us from October to now. We're not going very far, even though overall the intermediate going back to July and going back to the long term trend in early 2008 is still very much down. Short term, the trend does appear to be rolling over, as what we had on Friday was something that we haven't seen yet from the previous sell offs. Now, when the market broke down below the 50-day after retaking it on January 12th, my problem with not getting too bearish was that volume wasn't above average. The next day, the market held in. However, then the next day, it broke down on above average volume. And I believe that this should have been the start of the bear market sell off, because I believe this was the day when we had the 7 longs. And I'm going to bring up a long that we fully covered just to see if that's when it was. Yeah, so that appears when it was. So let me go back. Let me go and use the NASDAQ, since NASDAQ's the proxy that I like to look at the most. And even though it didn't sell off on higher volume like the S&P 500, it still appeared that this crack right here, to me, indicated that we would be starting another trend down. We're actually just resuming the trend down. But nope, however, we had two quite bullish support days. However, those bullish support days came up with, I had a few longs come up in those days that followed, and they have actually worked out, but the amount of beautiful charts with beautiful volume accumulation and beautiful max green bop and relative straight lines hitting new highs and good price patterns above the 50 and 200-day moving average are still very few to come by, obviously, after the downtrend we've been in. So I still don't have a lot of leaders. Instead, what I have here from the November bounce is basically a bunch of stocks that have been destroyed bouncing back, like Goldman Sachs, Morgan Stanley. I don't even know. Yeah, some of these have just died and even rolled over since then. Bank of America. But as you can see, the bounce seemed to have been led by laggards and not leaders, which is why I never turned bullish. Now, after these days, we come back on Tuesday and sell off huge. Volume's lower on the NASDAQ. The New York Stock Exchange, it's heavier. So clearly, the distribution is going on, and the New York Stock Exchange stocks and the NASDAQ stocks are going along for the ride. And here I was like, well, we've got to be breaking down here. But nope, once again, the market decided to say, not yet. We want to drive you crazy just a little bit more. And so the market holds in there. And now, though, it appears with the weak gains that followed the big sell-off, in 3 days, we did not recover the losses and still had a 3% loss from Tuesday. And then Friday, we just went ahead and saw a complete breakdown on the 30th here. As you can see here from the 20th breakdown, we held up. Then we retook the 50-day moving average, and this was considered a follow-through in Investors Business Daily. But when you blindly follow follow-through days and refuse to notice that only 1 out of 4 follow-through days work, the other 3 fail. So Josh, why in the heck do you even care about a follow-through day then? I'll tell you why I care. Because no bull market you will ever, ever, ever study, going back to at least 1880, that's how far I've taken it back, shows a stock market rally beginning without a follow-through day, without after 2 days of rallying on the between the 4th and 10th day. Sometimes it's been longer. There has been a higher volume day on price gains in between of 1 to 3%. What am I, from New York all of a sudden? 1 to 3% on volume higher than the day before. However, when volume is higher than the day before and much lower than the volume in November, October, and September, you can pretty much be sure that you're not seeing a real follow-through day. The volume that you're going to see on a real follow-through day is going to be huge whenever we get it. Not only that, you're not going to see laggard stocks leading the way higher. You're not going to see education, gold, software, medical, and other consumer-related products and other healthcare and medical stocks lead. You're going to see innovative technologies. I guess that'll come from nanodust, green technologies, and other new computing technologies as China and India's population is starting to explode compared to America. So as long as we start to see this kind of stuff happening, then I can see where the growth industries come. But until that happens, this rally and follow-through that everybody seem to want to believe in was quick to fail, and sure enough, I was proven correctly on Friday as a 2% drop on higher volume came. Now, why does it look like the rollover is starting again? Well, look at Citigroup. Look at Bank of America. Look at Goldman Sachs. Look at Morgan Stanley. Do these look like bullish rallies? Does that look like a ton of volume on the rally? And where are our leaders? Coco's our leader. APOL is our leader. ESI is our leader. Stray is our leader. I mean, education stocks can't be our leaders, you know, but yet they are. I'm not long any of them that I'm showing you, so I don't feel bad showing them, but they are the leaders right now. And I hate to tell you this, when was the last time they led? Do you see back here? 2000 to 2002? Look at the gain, 287% in a nasty bear market. These stocks do well in bad markets. Other stocks that do well in bad markets, from 2000 to 2002, here's gold. That's Newmont, a big company. So I wouldn't be shocked to see gold do well also. And let's see how much time we have left. Good, 4 minutes left. So let's get to the commodities. There's oil hanging in around that 35 to 50 area, I believe it's going to be stuck in. There's platinum. Finally had its bullish breakout day. I told you yesterday was the day that I'm signaled that, on Thursday I mean, was the day that I got my signal to say platinum is a go. Friday, follow through to that. Platinum is a go. Here's a short-term chart. Doesn't look that great from the downtrend, but looking up close on the daily, that's very bullish. You know what else is bullish? Silver. That's very bullish. It's about ready to take out the 200 and become nothing but a pure long, which is what gold's already done. And I have to admit, I've made a mistake in my IRA. When I went long gold, I set a limit for 88. I set a limit for something that ended in 63, and it hit 68 intraday. And I was so busy that day, I didn't check my own IRA. So instead of having 25% of my IRA in gold, I only have 12.5% in it. And since then, gold has rallied in the past 2 days 4.7%. So I've made a big mistake in my own account. However, I'm still in cash in the rest of it, and cash is outperforming the stock market by looking at Citigroup by quite a lot, and just by looking at the New York Stock Exchange by quite a lot. So I'm happy in cash. However, I do wish I had more gold. And platinum looks like it's ready to rally. Silver looks good. Gold looks the best. Look, it's about ready to hit new highs. It ain't far away. And basically, the market looks like it's ready to turn down. I don't use opinions in my analysis. I only use what I know and what I learn. And I posted some charts in my forums to show you global debt, United States debt, the recent borrowing of banks by the Federal Reserve from this year and expected, or 2008 and 2009, expected 2010. Compare the borrowing this year with all the previous years in the history of the United States. It'll shock you. So it's pretty nasty out there for the market. However, like that whack job Kramer says, there's always a bull market somewhere. Sadly, it's never in his portfolios. But I can find the bull markets for you. I found them. I've done a nice thing for you guys, and I've told you non-subscribers where to go looking for the leaders. It wasn't hard in the first place. But you guys that are buying the market when IBD mentions a follow-through day and selling it when it mentions in a correction are failing to realize 3 out of 4 of these things fail. But the 25% that work is what unleashes the 1,000% annual returns that I got in 2003, thanks to 2,390% returns in Taser and 310% returns in Hill in 5 months and 330% in 8, or 295% return in 8 and right around 2.5 months. That's what you get when you go long bull markets, the right stocks. Study my past big winners, and tell me if these charts don't come back, I'm going to miss them, because I'm not going to miss them. If these charts do come back, which why in the heck wouldn't they? The stock market always reverts back to an uptrend, then to a downtrend. So we're going to be able to play uptrends. There's going to be leaders in those uptrends, and I'm going to nail them. Study my past big winners. They will show up again when the time comes to turn, and if it's in 2010, 2011, 2012, 2013, so be it. I will be there, and if you don't want to wait around for those 1,000% returns, God help you with what's going to come. Part 2 and Part 3 will follow for my subscribers. Thank you, everybody, for watching and learning the truth. I appreciate it. Aloha. Don't listen to Wall Street, by the way, before I end this. Please stop watching CNBC. Please stop reading stuff on Yahoo, AP News. Stop with that crap. These guys get paid to report the news. These guys do not get paid to make a living in the stock market. I get paid to make a living in the stock market. If the market doesn't make me money, I don't eat. So remember, you're talking to somebody who has to make a living on his own in the market to survive. I don't have to write to survive. That ain't going to cut it where I live. Aloha.